Hello guys, so I'm going to use this video to illustrate and explain the various chart patterns that we have discussed earlier. So we talked about so many chart patterns, and this video is going to be a three-part series. So this is going to be part one. So for the first part, we are going to talk about the ascending triangle, descending triangle. We are going to talk about the symmetric triangle, the rising wedge, and the falling wedge. So like I always say, before you trade all this pattern, you have to identify if it is in an uptrend or downtrend. So the bullish patterns like ascending triangle and falling wedge or symmetric triangle that I'm going to discuss in this video, they are stronger, they are more bullish when it is an uptrend. So how do you identify your trend? You identify your trend by adding the 200 period moving average to your trend, to your chart. So if the price is above the 200 period moving average, you know that that is a long-term uptrend. If the price is below it, you know that that is a long-term downtrend. So you can also use the 50 period moving average or the 100 period moving average to gauge your mid-term uptrend. But in this video, we are going to only make reference to 200 period moving average. When price is above it, you know it's an uptrend, and when price is below it, you know it's a downtrend. And in an uptrend, what do you want to be doing? You want to be buying in an uptrend, and in a downtrend, you want to be a seller in a downtrend. So the first chart pattern I'm going to talk about is what is the ascending triangle chart pattern. So for the ascending triangle chart pattern, first of all, you have a resistance. Let me illustrate it. You have a resistance like this, then you have another rising channel towards a resistance. So you have your resistance over here. This area over here is your resistance, and this rising trend line is going to be acting as your support, like a wedge that is supporting price. So what is happening? Let's say you have your 200 moving average as this line, and price is above it. You know it's an uptrend. Let's say this is an uptrend. So what happens in an ascending triangle is that price is going to be going through like this. Let's say it goes like this, it comes down. So it's going to be moving through the channel like this, up, down. It won't break below the lower channel. If it breaks below the lower channel, you know the price is the chart is invalidated. That means the ascending triangle is no longer functioning again. So the price is going to be moving through the channel like this, and because it's an uptrend, price is above a 200 period moving average. What is going to happen is that you are going to have a breakout towards the upside. That is, price is going to break above a resistance like this. You are going to have a breakout. So that is an ascending triangle for you. But if it's a downtrend, you are going to, if it's a downtrend, let's say the price is below 200 period moving average, and you have a price moving like this, down, up, down, up, down. Because it's a downtrend, the chance of the price breaking down is higher because it's a downtrend. So it could also break down in a downtrend like this. So the ascending triangle is more strong, is stronger in an uptrend. Let's say price is above 200 period moving average. Ascending triangle always has about 80% to 90% chance of breaking upward. But if it's a downtrend, like the price is below 200 period moving average, it just have like 50% chance of breaking upward, or 50% chance of breaking downward. So it could also break upward like this. In a downtrend too, it could break downward. So for downtrend it works 50-50, but for uptrend, when you see ascending triangle, it is a sign of bullishness, because it means that buyers are willing to buy at higher price. You can see the price is making higher highs. Let me illustrate it like this. It's making higher highs, higher highs, higher highs into resistance, higher highs into resistance. So that's it about ascending triangle. Let me illustrate it one more time. So I said for ascending triangle, you have your resistance like this. You have your resistance like this. Then what you have again is a trend line like this, that is going to be like a rising wedge like this, and the price is going to be moving through it. If it's an uptrend, like you have a 200 period moving average like this, let's say that's your 200 period moving average, and let's say price is above it. Sorry, let's say this is your 200 period moving average, and the price is above it. So what you are going to have is that the price is going to be moving like, the price is going to be moving in the channel like this. So it's going to go up to resistance, come down to the wedge, go up, come down, go up, come down. Because the price is above the 200 period moving average, is going to break up, 80% chance of breaking up. So that's the ascending triangle for you. So ascending triangle is a bullish reversal chart pattern. So the next chart pattern I'm going to talk about right now is the descending triangle. So the descending triangle is just the opposite of ascending triangle. For descending triangle, you have a price making a higher lows into resistance, into support. So let's say this is your support. And you have a rising trend line like this. This side over here is your support, and this trend line is going to be acting as your resistance. So what is going to be happening? For example, let's say price is above 200 period moving average. Okay, let's say it's a downtrend. Price is below 200 period moving average. What is going to happen is that for the descending triangle, the price is going to come like this. The price is going to come like this towards a support, then bounce back, then come down, then bounce back, make a lower high, then come down to support, bounce back, make a lower high again. You can see it's making lower high into support, bounce back, then because it's a downtrend, it's going to break down. Because it's a downtrend. Let's say the price is above 200 period moving average. Let's say it's an uptrend. So what is going to happen is that it's going to move like this, bounce back like this. If it's an uptrend, it has like 50 to 60% chance of breaking up. But if it's a downtrend, it has a 80 to 90% chance of breaking down. 70, let's say 70 to 90% chance of breaking down. So if it's a downtrend, price is below 200 period moving average, 100 period moving average, or even 50 period moving average, it could break down. So we use a 200 period moving average to identify the direction of trend of the long-term trend. If price is above it, you know it's uptrend. If price is below it, you know it's downtrend. So the next chart pattern I'm going to talk about is the rising and falling wedge. So this chart pattern, it might confuse you. When you see it on your chart, you might think it's an ascending triangle or it's a descending triangle, but there is a difference. You know, for ascending triangle or descending triangle, you always have a, okay, for ascending triangle like this, you have a resistance and you have a rising channel like this. For descending triangle, you have a support and you have a falling channel like this. You have a falling channel like this. So this one over here is ascending triangle. This one over here is a descending triangle. So what do you notice over here? You are going to notice that for ascending and descending triangle, you always have a straight line as your resistance or a straight line as your support. So that is just the difference. And price is going to move through it like this, through it like this, through it like this, through it like the break up. So price is making higher high into resistance, higher lows into resistance for ascending triangle, and price is going to be making lower highs into support for descending triangle. So let's talk about the rising and falling wedge. So the difference here is that the rising and falling wedge, you don't have a straight line support or resistance. You are going to be having something like this. Let's say for a falling wedge, you are going to be having something like this, and something like this coming into it. It's not going to be straight line. Notice it's not a straight. Let's say something like this, and you have this one coming to it. It's not going to be straight. It's a falling wedge, because if you look at it very well, you can see that it is slanting down. Unlike you if you don't look it well, you think it's a descending triangle, but descending triangle has a straight line like this, a very straight support, and a falling channel. So you can see the difference. This one, notice how this line is sloping down and how this one is sloping down. That's a falling wedge. But notice this straight one and this one. So that is it. Let me illustrate how the falling wedge is again. So you have something like this, and you also have another trend line that is sloping downward again, So this is a falling wedge, and it is a bullish reversal pattern. When you see a falling wedge in an uptrend, it is a bullish reversal pattern. It means that the price has up to 70 to 80% chance of breaking upward. So let's take some example. So let me draw it again. You have a falling trend line like this, and you have another falling trend line as well. So you have it like this. So let's say this is an uptrend and price is already above a 200 period moving average. So what is going to happen is that the price will move. No, not with this. What is going to happen is that the price will move like this, up, down, up, down, up, down. So it's going to be making lower highs, but because it's an uptrend and this is a bullish reversal pattern, it's going to break towards the upside. You see it? So but in a downtrend it could move something like this. In a downtrend it has a 50% chance of breaking down. That means it could break up 50-50. It could break down 50-50. But in an uptrend it has a very great chance of breaking up, like 70 to 90% chance. That means in an uptrend you are going to be having higher trading, how do I say it, higher probability of positive trading when you are trading it in an uptrend than when you are trading it in a downtrend. Because in a downtrend it could break up, it could break down. So that's it for rising falling wedge. So the next one I'm going to talk about is rising wedge. So for rising wedge it looks something like this. You have a trend line sloping upward, and you have another trend line sloping upward as well. So the two trend lines are rising, so it's sloping upward. If you don't look it very well, you say this is an ascending triangle. No, it's not an ascending triangle, because ascending triangle has a straight line resistance and a channel that and a trend line like this. You can see the difference. So this one here is ascending triangle, and this one is a rising channel. So the rising wedge. So the rising wedge is a bearish reversal pattern. It is a bearish reversal pattern that anytime you see it, the first thing you should have in your mind is that it is bearish, especially in downtrend. So let's say this is a downtrend and the price is let me illustrate how it is formed again. Let's say this like this, you have one rising channel like this, you have another rising channel coming to go and meet it like that. So let's say this is a downtrend, the price is below 200 period moving average. Let me just use this color. Let's say this 200 period moving average and the price is below it. So for ascending triangle, you are going to have something like this. Price is going to come and it's going to be forming the channel. So this is basically your candlestick patterns moving through the channel like this, and because it's a downtrend, it has up to 70% to 80 or 90% chance of breaking down. It always breaks down because it's a bearish reversal chart pattern. It always breaks down, especially in downtrend. When your price is below 200 period moving average, it breaks down. So the next so I'm going to explain it in another form. Let's say this is an uptrend. That means the price is above a 200 period moving average. Let's say this 200 period moving average, and the price is moving like this through the channel like this. So because it's an uptrend, it could still break up like this, 50% chance of breaking up towards the upside and 50% chance of breaking down towards the downside. So in a downtrend, it could break up, it could break down. So that's it about a rising and a falling wedge. So the next chart pattern I'm going to talk about is the symmetric triangle. The symmetric triangle. So for the symmetric triangle, we call it symmetric triangle because it looks like this. The angle are of the two sides of the triangle are the same. So this is a symmetric triangle. What is a symmetric triangle? So a symmetric triangle is like can I say it's a neutral chart pattern. But the thing is that in an uptrend, it usually breaks up. Why I say it's a neutral chart pattern is because price could move like this, come like this, come like this, come like this, come like this, and break up towards the upside. And the price could also move like this, move like this, move like this, like this, and break towards the downside. So that's why I said there is a neutral chart pattern. It means it can break either ways. At least you see that the angle of the two sides are equal. It's a symmetric triangle. So in an uptrend, let's say price is above 200 period moving average, and you see price moving like this towards the symmetric channel, symmetric triangle, and it's moving like this. So because it's an uptrend, it has up to 70 to 90% chance of breaking towards the upside because it's an uptrend. That's when the price is above the 200 period moving average. So let's say it's a downtrend. Let's say it's a downtrend and the price is below the 200 period moving average. This line I just drew at the top is, let's just use it at 200 period moving average. So what is going to happen is that the price will come, because it's a downtrend, it's going to consolidate between this channel, this symmetric triangle channel, and break down because it's a downtrend. So in a downtrend, it has up to 60 to 90% chance of breaking downward. So that is it for this video. Our next video, we are going to talk about other chart patterns as well. So